As I've stated in the past episodes, now's the time to be in self-storage or to be getting into self-storage if you've ever thought about it. And I want to use this opportunity as a way to show an example of what I'm talking about. Yes, I have a virtual boot camp coming up in May 15th and May 16th, where we can take somebody from square zero all the way to putting their first self-storage facility into place. And I'm going to talk about it in this episode. But I wanted to use this episode to give you a quick example of what we're talking about, because many of us have been trying to figure a way to get into self-storage, but we keep looking at product and packages and offerings, and nothing seems to make sense. Well, if that's been your experience, this episode's for you. My name's Mark Helm, and I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the QuickStart Academy. And the QuickStart Academy is putting on the virtual boot camp May 15th and 16th. And in that boot camp, we're going to go from designing a business plan to knowing what to look for, to knowing how to analyze it, knowing how to find the opportunities, see the opportunities, put the opportunities under contract and control them, all the spaces, all the way through putting it into service. My goal is to exceed your expectations on what you're expecting from this training, and so far we have. But more importantly, what you're going to have at the end of the training is the confidence to successfully be able to find the deals and negotiate the deals and be someone who's strong as you're finding your product and putting it into service. If you've ever wanted to have the freedom and the financial benefits that the self-storage industry offers, but you can't figure out how, then I suggest this training's for you. Let me show you a little bit about what I'm talking about. Self-storage opportunities in today's world look very different than many people think. That's one of the challenges that many of us have had. We look at 10, 20 deals, run the numbers, really dig into it, and nothing we look at, absolutely nothing, begins to make financial sense. I mean, literally, we can make the same money or more by just putting that money in a mutual fund than buying the existing self-storage at the prices that it's on the market for. I mean, I get it. I've had the same frustrations. I had to figure a way how to create opportunities with the way the market currently is. And the opportunities look different than many people think they should look, or how other real estate sectors have looked. Many people coming out of particularly the single-family housing business, self-storage returns in business and opportunity creation looks way different than it does in the housing industry. For example, there's none or very little distressed self-storage. Odds are, if it's distressed, I don't want to buy it. Usually distressed self-storage, it's distressed for a fundamental reason, not an ownership reason or a management reason. Most distressed self-storage is because it's in a sub-market that's overbuilt, and there's nothing I can do about an overbuilt sub-market. So we typically let most distressed self-storage just fall by the wayside. Big reason for that is self-storage is the lowest foreclosed on asset class there is, still today. Yes, we have to literally create our opportunities. And let me give you an example of what I'm talking about. Now, this example doesn't necessarily work for everybody. It works for us or someone like us, depending on what your strategy is. But no matter what your strategy is, there are strategies where you, quote, create the opportunities. Let me show you an example of what I'm talking about. This is a real deal on the market, so I don't want to show you the marketing package, but what I did was I took the existing unit mix inserted it into our analyzer. Then I put in our operating expenses, which are usually higher than the sellers, but I put our operating expenses in, and I put our loan in, and this is what came out from the existing facility that's right there. And I'm sure this is what you've seen quite a bit of. I think this is very typical. In fact, it might even be a little better than many of the projects that we look at. But it was around $3 million. I assumed I'd be able to get it slightly lower. We put in an acquisition price of 2.8. I put in the unit mix. I assumed around 85% occupancy, and came up with in year one net income of $179.26, which wasn't far off from what the package was saying. They were obviously a little bit higher, but I used our expenses and our loan, and you can see in year one 2% kind of cash on cash returns. And if you scroll on down the page, you'll see we're looking at about a 13 to 14% IRR over a 10-year period. And all we have going on here is income going up 3%, and operating expenses going up 2.5%. Very boring deal, very typical of what you see out there over and over again. Would you buy this deal? Well, we might actually, under certain terms and conditions. Let me show you what I'm talking about. What we saw on this deal was that there was parking space, or in other words, there was land, expansion land, that was only generating parking income. We dug into that sub-market a little bit through some subscription services, but if you don't want to pay for that, you can also do it yourself. You can pull up the population in a 3 to 5 mile radius of that facility, and then plot out the existing facilities and try to estimate what the population is. And to us, it looked like it was about between 5.75 and 6.25 square feet of self-storage per person in that sub-market area, which means there could be more demand there. So it's a green flag for us to go on and continue analyzing this. If we actually do put this under contract, or anything we put under contract, we get a feasibility report that will dig much deeper into it and tell us what it is, and the barrier of entry for other people coming in, whether it's high or low, and what the optimal unit mix is. But for the preliminary analysis, we just saw that there appears to be demand, so I went back to reanalyze it. What I did was we took the parking income out, and we figured out how many square feet of self-storage we could get on that vacant land, and it looked like we could get about 25,000 additional square feet of self-storage. So we went back, analyzed it as an expansion, took out the parking income, put in the self-storage, assumed a lease-up rate of 1,000 square feet a month. And let's take a look at this particular project. We're offering the same price, the same $2.8 million, but now let's take a look at this project. Cash on cash return actually went down a little bit in year one, simply because we have more operating expenses, and we're doing construction during year one and losing the parking income. So the gross potential income actually goes down. But you can see that same $2.8 million, but we've now turned this deal into a total of about $4.35 million project rather than a $2.8 million project. And in the lease up, we hit stabilization between years 4 and 5, and we've taken the same project, same offering price, and are now generating close to 15% cash on cash when we're stabilized, and we have created a lot of equity. Now, this is a real deal. We've gone from 13 to 14% IRR to 20% IRR, from 3 to 5% cash on cash return to 13 to 15% when it hits stabilize and continues to go up. But more importantly, what we've done is we've taken a project that initially had around 170,000 net operating income, and we've turned it into a project that now has about 400,000 net operating income when we hit stabilization on the expansion. And we have created about $1.4 million of additional equity by adding that expansion. Let me show you what I'm talking about on the additional equity. We turned this 2.8 project into a 4.3 project. And when we're done, our NOI is, let's say, $400,000. If you take that $400,000 and use a 7 cap on it, be conservative, use a 7 cap on it, that creates a value of $5.7 million. That's about 1.4 million more than what we put in the project. So we've created over $1 million to almost $1.5 million of equity, and we're getting a 15% cash on cash return that's only going up. Same deal, spitting out that 2.5% return. And that's just one example of how you can create opportunities in today's world. And that's what this boot camp is all about, to give you the benchmark numbers, the current industry construction numbers, and all the numbers that you would need to know in benchmark data to analyze, create conversions, new construction, expansion. And that's how you create opportunities in today's market. Now, this one deal isn't going to make you wealthy and totally change your lifestyle, although $1 million worth of equity in a few years is worth taking the time to do. But let's say that you did 4 of these deals over the next few years. What will your financial and work life look like in 4 to 7 years from now? Is it worth the time and the calories right now to build something and build a portfolio and a financial stability like that? Sure was for us. Not that everyone's going to be successful. I can guarantee nothing, but I don't have to work. I work because it's exciting and I love taking myself to the next level. And I want to support you all if you want to go to the next level using self-storage. That's what this boot camp is all about. And if you don't go to the boot camp and you still want to get in self-storage, figure a way how to do it. This is just one example of the ways that people who attend the boot camps can go into the marketplace today and create their own opportunities. This is a real deal in today's market. And this is just one of many. I keep a folder of these opportunities, and then when it's time to go, I organize that folder in order of, the deals we like the most to the least, and those are the deals that we go after. You can do the same thing. So if you ever wanted to get into the self-storage business, in my opinion, now's the time. I can't guarantee you success, because success has way more to do with just knowing how to do these deals and analyze these deals. And we talk about that in the boot camp too. But what I can guarantee is you will get 110, 120% of what I have to offer. The knowledge and the mistakes and everything I've done in the past 25 to 30 years, I've condensed down, and you're going to get it in this boot camp. So the goal is to help you design your strategy, which is going to be different than the next person's strategy, and give you everything you need to get into self-storage business if that's your goal. Now is the time. You want to be in self-storage as the economy goes down. Self-storage is the most recession-resistant asset class that there is, in my opinion, and it sure was in the last great recession. Thank goodness I was in it back then. So thank you very much. I look forward to being with you again soon. And hopefully, I'll be with you in the virtual boot camp. Click below to get more information on it. Thank you.